course, let's now cut across, or let's go across to Abhishek, who is here to tell us about RBL Bank, which is seeing a double-digit loss today.
Ekta, to begin with, the unsecured portfolio deterioration of asset quality weighed on the performance of RBL Bank. Take a look at the net interest margin. It's declined more than 60 basis points on a sequential basis to 5.04% versus 5.67% in the previous quarter. It's at 5-quarter low with respect to net interest margin. Now, slippages were elevated. They came in at 1,026 crore versus 720 crore in the previous quarter, up more than 42% on a sequential basis. A 12-quarter high with respect to quarterly slippage that they have recorded. Annualized slippage ratio is elevated at 4.67% versus 3.3% in the previous quarter, and this is at an 8-quarter high. So the asset quality did deteriorate. Gross NPA ratio inched up to 2.9% versus 2.7% in the previous quarter, and this impacted their return ratios. Now the return ratios, or ROE, was already in the single digit. It further deteriorated, so their ROA and ROE, that is return on asset and return on equity, is perhaps at an 11-quarter low. Citi has written on RBL Bank. They have a buy recommendation. However, they have cut the target price to 255 from 281 that they had earlier. They say that factoring in the unsecured stress, net interest margin pressure and lower than guided growth, they have cut their earnings estimate between 15%, 12% and 9% over the next couple of years. Back to you.
Thank you so much for that, Abhishek. A whole host of EPS cuts are coming in for RBL Bank, and that is keeping the stock under pressure. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.